oh, trickle down economics or what have you. They're going to grow the economy, and the increased tax revenues, we're going to pay down our debt. That was the theory for years. That they're going to stimulate aggregate demand, and it's going to cause GDP growth, which will increase tax revenues, and we're going to pay down our debt. Well, that never, ever, ever happened, and predictably never happened. It was just about printing more money and a lot of malinvestment, that is to say, thieving going on, and the capital disappearing. Trillions of dollars just going into a global black hole controlled by the big four accounting firms, this floating casino that never pays taxes, which is now over $30 trillion in big, right?
In a recent display of Bitcoin's dominance, Max Keiser, a prominent Bitcoin advocate, offered compelling evidence for Bitcoin's ongoing outperformance against other cryptocurrencies. Keiser's commentary stemmed from a recent CoinShares report, highlighting institutional investments in crypto assets. Notably, the report revealed that Bitcoin attracted an impressive $139.8 million in investments from institutional funds, constituting 99% of total inflows recorded by CoinShares in the prior week. In contrast, competing cryptocurrencies like XRP, Ethereum, Bitcoin Cash, and Litecoin failed to match Bitcoin's performance. Keiser's assertion that everything goes to zero against Bitcoin underlines the strong institutional preference for Bitcoin, positioning it as the premier choice over its rivals. This sentiment underscores the report's findings, painting a clear picture of Bitcoin's prevailing dominance in the cryptocurrency market. With institutional investors favoring Bitcoin and long-term holders accumulating the digital asset, Bitcoin's unrivaled leadership in the crypto landscape is becoming increasingly apparent. This trend cements Bitcoin's role as a pivotal player and a potential solution to various financial system challenges.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
And with Bitcoin, it's kind of the end of price discovery because everything will be priced in Bitcoin eventually. Everything goes to zero against Bitcoin. And so for someone like myself who's been following this for 40 years, finance, markets, technology, Bitcoin is the holy grail. It's the end all. I would say that my compatriot in all of this would be Michael Saylor, who really, when you hear Michael Saylor talk, he talks about the aesthetics of Bitcoin, the beauty of Bitcoin, and he speaks about it in a way that I think carries the torch from the Max and Stacy from 2011. He started buying it, I guess, when it was 10,000 or 12,000 or so in the 2020 era. So we were there from 2011 to 2020. I think he's kind of carried the torch from 2020 in a lot of ways, and introduced Bitcoin to massive pools of capital. I'm surprised that more companies haven't followed his lead, given the outbreak in inflation that we've had, exactly as he predicted it. The melting ice cube, as he called it at that time, is exactly what happened. And I'm surprised more companies, although I guess we could say now we are in an era where BlackRock and these other major institutions are now finally looking at Bitcoin. So his work on the institutional level, I guess, is bearing fruit now, 3 years later. And I see in the Middle East, they're starting to recognize Bitcoin. And so that's a huge pool of capital. I think all that oil money, when it finds its way into Bitcoin, will be a huge catalyst for higher prices. It's a natural way for the oil industry to diversify their portfolio and to because Bitcoin essentially is energy, and I think energy eventually gets priced in Bitcoin, and there's a marriage between these two in a big way. I think that's the kind of the answer. Is I've always been fascinated by price discovery in markets and kind of the architecture of markets and how markets work under the hood. And Bitcoin is just such a it's a pristine, perfect money, and I think it's something that humans have been searching for since forever. And now we're seeing it change society on really a fundamental level with the introduction of Bitcoin. It's a lot of people are freaking out because of it, because it destroys the status quo. And a lot of people who were kind of waiting for it to come along, who had the faith, that humanity could be saved, they see Bitcoin in those terms. So you have this split going on, which is very exciting. And so it just continues on and on. How could you not be interested in it? How could you I think the people who were into it earlier and walked away just never got it from the beginning.
On the flip side, alongside the institutional inflows, analytics firm Glassnode has shared a captivating revelation. The metric measuring Bitcoin's supply held by long-term investors has achieved an unprecedented peak of 14.5 million Bitcoin. This figure indicates that seasoned investors are opting to accumulate and retain Bitcoin rather than liquidating or dispersing it. This data reflects the resolute belief among mature Bitcoin holders in the enduring value and future potential of the flagship cryptocurrency. Maintaining his optimistic outlook on Bitcoin, Max Keiser delves further into the institutional dynamics at play within the financial system concerning Bitcoin. Let's now return to the video to continue exploring Keiser's insights.
Once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this Crash JP Morgan Buy Silver campaign, and we got the price from 15 up to 50, which was the old a bunk, the bunker, the Hunt brothers. The Hunt brothers got a price up in the 80s into the $50 range, and they were cornering silver. So we got it back up to the old Hunt brothers $50 level, and then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. But at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys.
Shortly before the opening of Asian markets on Thursday, Bitcoin's price experienced a volatile 24-hour journey, settling around $29,096, relatively stable within a $500 range since late July. Investors seem to disregard industry-specific and macro events that briefly pushed Bitcoin above $30,000, such as the Fitch downgrade of U.S. Treasuries and MicroStrategy's Bitcoin purchase plans. However, the excitement waned as the price dropped below $29,000 due to reports of potential federal charges against Binance executives. Various factors contribute to this volatility, including corporate investments, regulatory changes, macroeconomic shifts, and the potential for improved accessibility via products like ETFs. MicroStrategy's ongoing Bitcoin investment and anticipation of the upcoming Bitcoin halving are shaping market behavior, with traders seeing such milestones as catalysts for movement. Despite Ethereum's stability around $1,832, other major cryptocurrencies suffered losses post-market upturn. UNI and BCH were down over 6% and 5% respectively, while Litecoin plunged nearly 6% despite its halving event. Heightened volatility is expected due to factors like the impending BlackRock spot ETF decision and the approaching Bitcoin halving. Share your thoughts on Bitcoin's post-halving price in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.